Look at the specific Sasol. We're going to be quick on this one because we talk about Sasol a lot and we talked about it recently and discussed the oil and gas sector. But remember, this one was founded in about 1950, came out of the state's effort to try and deal with the shortage of oil. So they were looking to turn coal into liquid fuels using some technology which was invented by the Nazis. Sasol today uses coal, gas and oil reserves to manufacture these liquid fuels. That's done down in the Secunda area, but it's now throughout the world. Market cap of 382 billion rand. Nice big number. Price to earnings ratio of about 12, dividend yield of 3.2%. So at Tsepo, we've got Secunda, which absolutely oozes money. Then we've got the Qatar operations of Oryx. The new CEO, David Constable, is taking it into the international market with the plant in Louisiana. But it's very big in chemicals as well, right? Because as a byproduct of all of those things it does in Secunda and also in Sasolburg, produces a lot of these chemical inputs.
Yeah, it does.
You like Sasol at current levels? Look how well it's doing.
I do. I like the theme. I think there's quite a bit of growth coming through via that Louisiana plantation, which I don't think has been fully reflected in the price. Lovely firm. It's the big player in the sector. But yeah, it ticks all the boxes for me. So at these levels, I'm still a fan.
Because obviously there's a lot of what looks like relatively cheap natural gas around in the world because of fracking and also because of gas that's associated with oil fields. And by virtue of that being available with that big pipeline network in the US, they can source gas and then they can use gas to convert into transport fuels, which are still priced relative to crude oil. So they are the world leaders in operationalizing that conversion of gas to liquid fuels. So if they can do it in the US, that must mean they're attractive to international investors and international strategic buyers even.
That's a great point. I think the big concern people have is that with this fracking on board, what does that mean for energy prices going forward? The reality is that if I just look at China and I look at their energy consumption, it's where South Korea was in the 80s. So there's a lot of catch-up, a lot of slack to catch up on in terms of the Chinese market, and you can extrapolate that to India and a few of the other emerging markets. So I'm not so concerned about energy prices going forward.
So you would anticipate crude oil prices staying at around $100 a barrel, and at that level, and the rand at 10 to the dollar, Sasol continuing to make excellent money at home and then advancing its business program with these new activities.
I think that means a lot of upside for Sasol.
But it must be said, though, the capital expenditure that they are anticipating is very substantial. So it's going to be quite a balancing act for management, David Constable in particular, to work out how fast to go ahead with this thing.
No, for sure. But I think their capex beforehand hasn't quite been this magnitude, but they've shown that they're able to implement these things at decent costs. So I'm not too stressed about what that means going forward for the business.
Good. So we're hot on Sasol.
Hot on Sasol.
Excellent. At around 500 Rand a share.